Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of Finstrat Management. At Finstrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast and I'll share how you can be our next guest. Now on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of Finstrat Management. Really excited because with us today we have Sean Tepper, founder and CEO of Tykr. Sean, welcome to the podcast.
Kristian, good to be here.
Hey, let's start with Tykr. Would love to hear the company's focus and the problem you guys are solving.
Yeah, so we're focused on helping the retail investor. Long story short, Tykr's about 4 years old. We've got a little over 10,000 customers in about 50 countries. And what we do is we help the retail investor invest, or I should say, buy and sell stocks with confidence, because there's a lot of people entering the market, joining platforms like Fidelity, Robinhood, E-Trade, the list goes on, and not really sure what to do thereafter. We solve that problem. Within seconds, am I buying a strong stock or a weak stock?
And what was the inception behind the idea?
Yeah, so my backstory, about 20 years in tech, about 15 years in finance, and I started the hard way investing. It was speculative, high risk, invested in some private companies and some companies in the public market that could have been a little riskier, IPO stocks or penny stocks. And I knew guys like Warren Buffett and Charlie Munger were making consistent returns that can beat the market. And you and I know these are not gambling men. They're not using feelings or emotions. They're using some sort of logic to start their process. And I asked the question, I'm like, okay, so where are they starting? And I decided to go down the rabbit hole, read as many books as I could on value investing, as well as understanding the math that these guys are using. And I found a few books. A guy by the name of Phil Town really provided more rigor than I've ever seen before on the number of metrics you need to pay attention to, such as revenue, net income, EPS, debts, liabilities. It just went on further than anybody else. And I'm like, to me, based on my tech background, that makes a lot more sense, because in tech, when you do testing, there's a lot of rigor, a lot of tests. You can't just use 2 data points and make a decision. It's like hundreds. So I decided to put things into Excel, used it for about 4 years, making returns between 15 and 50% consistently per year. And that brought me to 2019. And I always wanted to create a SaaS product. And I started sharing this Excel sheet with a few people. And they were like, you know what? You should turn this into a software. And I was like, all right, here we go. Took about a year to build the first version. We went live in 2020. And then it took about 6 months to get the first paying customer. But I've been building tech this long. That's how it goes. You want to get feedback. You want to find out, hey, what can we add? What can we do better? What are you looking for? And that's when paying customers started not only paying, but staying. And here we are, like I said, a little over 4 years later, and we got over 10,000 customers.
Wow, that's a phenomenal milestone. So congratulations. Would love to unpack your approach to value investing, in so much as for benefit our audience, a lot of different ways that people who participate in the market approach buy-sell decisions. And I'll oversimplify it and say, hey, you have day traders who are very technical in nature, and then you have investors like Warren Buffett who take a materially longer time frame. How did you decide? How did you decide where you thought it made most sense for a Tykr to fall?
Yeah, to zoom out a bit, I did try a few strategies, a little bit of trading, a little bit of options trading. I won't spend too much time there. And then got into investing and really found that value investing is the way to go, because you're making money work for you. Whereas with trading, you're still working for money. It's still a job. You're sitting at your computer, you're looking at charts. And I have other things I want to do in life. And I was also looking at the statistics. It's 99% of traders lose money. And another thing that's fascinating is there's a little over 3,000 billionaires in the world. And I'm going to have you answer this question. Of those 3,000 billionaires, how many do you think are traders and how many do you think are investors?
Oh my gosh, if I had to guess right now, I'd say at most maybe 20 traders in there, and investors, I'll go 500.
So of that list, there are 0 billionaire traders And of the 3,000 billionaires, they're split between stock investors, real estate investors, and entrepreneurs. So it's like, all right, so if you want to make real money, you have to make money work for you. And the concept of buying and selling and buying and selling doesn't make sense. It's about buying great businesses and then buying more, and you don't take your foot off the gas. So that made sense to me. And my approach is value investing is this is your world. You're looking at income statements, cash flow statements, and balance sheets all day. And that can be a little foreign to most people. So we simplify it and we gamify it in Tykr. I'm all about point systems. And within Tykr, what I did is from the beginning, I'm like, all right, if we're going to serve people on a global level, what is the most universally recognizable grading system in the world? And my answer to that was the traffic lights. No matter where you are in the world, it's green, yellow, or red. So our platform, it's on sale is green, watch is gray, and then red is overpriced. So you're looking for those on sale stocks. And for context, only about 15% of stocks in the market actually hit on sale. It's very hard to do. So that way you want to find a financially strong business, go for on sale, high probability of making money, low probability of losing money. So that's really the foundation of the platform and value investing.
Got it. Would love to unpack your user growth to date. Over 10,000 users, that's a material milestone. What sense can you give us as to how you went about acquiring those customers, and then how you think about scaling efficiently?
Yeah, so with the B2C side, and we're starting to open doors now to B2B, and I'll talk about that in a minute. But with B2C, I knew people right off the bat, they're looking for stocks on YouTube. That's a place where people are hanging out. You got to go to like, where are people hanging out? So people are searching for stocks like Apple, for Nvidia, for Tesla, all the usual suspects. So we get about 17% of our leads from YouTube as of today. We get another 16, 17% from SEO. Now, search engine optimization is it's not an overnight fix, but put it in place early so when people are searching for, should I buy, like that's the common search phrase, should I buy Apple? Should I buy Tesla? Should I buy Nvidia? We try to pop up at in some way, shape, or form there. So we've got hundreds of articles that are well optimized there. We also have referral programs, refer friends. That kind of goes along with a big percentage of our audience is grown through affiliates. We pay our affiliates like a commission for the first year, and they love that. They can, like YouTubers, bloggers, they can make money with Tykr by just simply sharing the platform. So those are the major growth strategies.
And and what about just trial and error? What tactics have you employed that just didn't yield the outcomes you were looking for?
Yeah, good question. So we have Tykr, and then we have another platform called Tykr EDU, which sells courses. We call it a nice to have, not a need to have, but that's a higher price point. So Tykr's B2C play for context is like $15 a month, 99 a year. The courses can run about $1,000. And we tried a few different agencies to do ads. And these are agencies that previously ran ads in the finance space, especially in courses, that have done very well. With us, I was like, I want to do lift and shift using very similar strategies, methodologies that were used in the past, and we got no results. And a part of it was, are these BS testimonials? What are we dealing with here? So I tried two agencies that failed flat there, tried one agency on the Tykr side to generate revenue with ads, and generating a positive ROAS, return on ad spend, is actually, it's pretty hard to do. And most people that are running an agency or marketing firm, from my opinion, are not very good at it. That's what I found over the last few years. Not everybody, but most. So that's where I had some strikeouts.
Interesting. I'd be lying if I didn't say I've had similar instances in the past. My sense is that they understand brand, they understand psychology, but where it's difficult is that when you're an early stage company and you just don't have the brand recognition of a peer who has a much larger budget, it's harder
Right.
To create that return. And obviously sales are one thing, but then the underlying infrastructure to support that growth. Would love to hear how you think about customer success, customer service, and that's probably a good starting point.
Yeah. Customer service is huge. My past background, I've worked for some larger companies, including GE and Kohler. And one thing that Kohler, and I really respect that company a lot is I remember being in a boardroom with one of the executives and he says, we want to provide a gracious experience from A to Z. And that resonated. So at Tykr, we try to do the same thing as when you join, there's a very welcoming email. It's a video of me saying, hey, welcome to Tykr. You're in the right spot. Reassure them they made the right choice. And then from there, we set expectations. You're going to get a new email tip every single day over like the next month. And of course, you can skip the emails and just read them all in one go on our website. But we're big on that. And then customer service, we like in my case, I'm doing all the customer service emails. I try to talk to people like I'm sitting down and having a beer or a coffee. Like talk to them like a real person. Don't use $20 words, which can be common in finance, and just treat them like a real person. And I will say this, like you can have a bad product or a product that's it's seeing improvements in great customer service and you have a company. But if you flip that equation, you got a great product and bad customer service, you don't have a company. And because of the customer service and talking to these people, I'm just treating them with respect, hearing their voice, adding their ideas to our backlog. Our Trustpilot is a 4.9 out of 5. And I have to say, it's our platform has grown over the last 4 years, but it's customer service is what drives that. It's not the tech.
And so then, obviously, one of the draws around SaaS are really high gross margins. But we've this topic has come up on the podcast before, and I find myself having conversations with founders as well. It's like, where's the line between ensuring that your customer's experience is great, i.e., having a staff, sometimes invariably humans who can engage, but also making sure that you're creating gross margins that the rest of the world, the board, potential investors are going to find appealing.
Yeah, and you see this a lot, I'm sure, is startups will create a lot of bloat, a lot of high paid salaries early on, and we have done our best to avoid that. So our business model, actually, I'm one of the only guys from the States. Otherwise, I have a lot of contractors around the world that have helped. And with that, you're not paying your health insurance and Social Security and all that. And it just happened to work out. They're one, they're very talented people, and two, they just happen to be located outside the States. That has helped reduce costs. But of course, if you build a big team up in the US, then they're on payroll, W-2s, the whole deal, and expenses increase. And yeah, your margins decrease. I know we'll have a US team, a much larger team at some point, but this bootstrapping philosophy I've done before, and I've done it even in larger businesses, is try to run as lean as possible, work smarter, not harder. And it really pays off in the end. It can be a little painful for guys like me, like a founder, like you put in a little more time, but I would say I'm pretty good at time management. So I'm not working like 10, 12 hours a day.
Might have been a time, long time ago, where I think we probably would have seen a lot more resistance to outsourcing. But my sense is that the entire market has generally accepted that. It's just a smart approach.
Right.
Because, hey, if your competitors are doing it, how else are you going to make your dollar go further to remain? Earlier, so we talked about your B2C approach, and you briefly mentioned it sounded like B2B was on the horizon. Would love to hear how the company is evolving as you're learning more.
Yeah, so we started getting approached by 3 different potential channels when it comes to enterprise. One channel would be brokers. So think of like the Robinhoods of E-Trades, the Fidelities of the world. Second would be record keepers, those who are creating 401ks for companies. I never saw that angle coming. I can talk about that in a second. And the third would be wealth managers. Where I'm really putting most of my attention right now is brokers. The reason is, and I talked to brokers about their issue which is people join brokers and they sit. They'll sit for 3 months, 6 months, 9 months, 12 months, and not do anything. And brokers, for context like Robinhood, this is all public information, they generate about $2 billion a year, and about 40% of their revenue is from transactions. Now they're advertised as a free broker, but there's payment for order flow going on behind the scenes, which is the micro sense there. And I went to them. I actually did a presentation to one broker, not Robinhood, and I actually used their numbers in the pitch. Hey, here's your revenue. Here's what your transaction revenues are. And if we can increase your transactions by 1%, in this case, it was showing they would add like 2 million in revenue to their business. And then I showed them the data. This took about a year, over the last year, to show what kind of lift is Tykr doing with this audience. We're increasing transaction fees by 18% in the first year. And that percentage is now starting to catch these brokers' attention, because I'd love to partner. As we speak, we don't have a broker customer yet, but that's where the real growth with this business. We can do the B2C thing until we're blue in the face, but you want to partner with a channel partner and get in front of millions of people overnight, because we can make a big difference with brokers, getting those people off the bench and in the game. So that's one. I'll keep the next two brief. Record keepers, their issue is when people retire, they move their 401k over to another provider like an IRA or something like that. And record keepers are like, whoa, you don't have to go anywhere. You can keep it here. Tykr's retention is pretty incredible. For context there, our average engagement time is about 6 minutes with the web app, and good for a SaaS is about 53 seconds. It's like people use the platform consistently and they stay on it a long time. The mobile app is even bigger. So good for a mobile app like Instagram is about 5 minutes. Tykr is over 20 minutes. So retention, and we have other metrics behind the scenes too, but the retention is big. So that's the record keeper play. And then the wealth manager play is we're seeing situations where wealth managers are getting the conversation where the husband and wife will sit down. The wife will be like, hey, we want you to manage your money. And the husband's not all of it. We want to do a little DIY. And the advisor run into a situation where they can't, like, how do they navigate that conversation? With Tykr, you can say yes and yes to both. Yes, we can manage your money. And yes, you can do it on your own. And the advisor can even create guardrails so they don't invest in like weak penny stocks or IPO stocks that are going to lose money tomorrow. So 3 interesting plays going on. The broker play is, I see the biggest opportunity early on.
I sometimes I get the sense it's a clear path of how to get to growth, but maybe founders don't necessarily appreciate that this B2C step or selling to consumers, while it doesn't scale as fast as having a relationship with a broker, is still invaluable on the road to business relationships. So I'd say it totally makes sense, but good on you for starting to get engagement just to be able to demonstrate, to close these relationships. A slight pivot. And so I think as I continue to think about getting this out in scope and the element of engaging with individuals in their portfolios, how are you thinking about AI?
We use AI in Tykr already. So for context there, we got a tool in Tykr that's really inspired by Warren Buffett. Phil Town coined the term the 4M. You've got the math part of investing, which Tykr does automatically. The other 3 can be hard to do. So you get the meaning, which is a business model. How many revenue streams does it have and how scalable are those revenue streams? The third M is the moat. How does a business compare to the competition? And the last M is the management. That's the track record of your quarterback, your CEO. Doing 2, 3, and 4, it can take you hours, if not days of research. We used OpenAI and did prompt engineering testing for about 6 months to create a point system from 0 to 100 of where does your 4M land, and that's in Tykr right now. And it's like that little layer of confidence above the basic summary that Tykr already has to really give people the motivation to, yes, I want to buy that stock, or no, maybe I should avoid it. So it's been a huge time saver, and people they do love that tool.
Oh, obviously super encouraging to hear, because my sense is that founders are going to continue to incorporate AI and look at opportunities to optimize outcomes, streamline workflow. And so just further reinforcing what we're hearing talking to other entrepreneurs. Love to talk about metrics. Earlier you mentioned retention. What other metrics are you looking at to help guide your decision making?
Yeah, so 2 big ones in the top of the funnel would be our visitor to trial conversion ratio and then trial to paid. Our model, for context, and this is a B2C play. I really like the B2C play where it's a 14-day free trial or whatever time period, no credit card. Drives me nuts when I land on a platform, says free trial, and when you join, they're immediately asking for your credit card. I'm like, come on. Let me test drive the car. I don't want to commit. So that first conversion, that visitor to trial, you want to be about over 8% with a SaaS, especially a low touch SaaS like Tykr. We're at about 18%, which is awesome. The trial to paid has been a lot harder. For example, you want to be over 10%. We were for a while like around 4%, 5%. We figured out some ways to really encourage people to join in that trial period to become a paying customer. And we did jump above 10. We arrived at 11 over the last month. So some of the changes we're making within that trial period are motivating people to stick around. So those are two big metrics along with churn that we've been really focused on over the last few years.
If you think about, I think a lot of founders understand this idea of, hey, let me look at my business, my performance metrics. But it sounds like those are great examples of how people are actually taking steps to incorporate what they see to improve. And with that, I'm curious, has there ever been like A/B testing where, when you're on the way to 11, where you said, hey, let's run two different parallel trials and see what the outcomes look like?
We haven't done in parallel at the same time. We haven't used the tech. I know there's certain techs like it auto changes the copy in your homepage depending on who's showing or who's seeing what. But we have tried, for example, making changes every 2 weeks and then measuring that. Okay, what are we? Yeah, exactly. A little more in sequence as opposed to parallel, but same thing. And then document what are we dealing with? What changes did we make? What are we seeing? And that's honed in. The other thing, too, and this is a time consuming thing, but I recommend founders need to do this, is we have an auto sequence for churning, and our churn, for context there, we're really proud of that one. From 2 years ago was like 11% per month, which is terrible. And it got down to about 5%. And with a SaaS, the benchmark, you want to be at about 5.75% or less to really achieve product market fit. So about a year ago, we're at 5. Now we're averaging about 3.9. And in order to get there, when people leave, there's a sequence that goes out and it asks them, hey, what can we do better? I also take the time, and I can't do it with everybody, but I see who churns out and I send an email to these people asking, first, I'll say, thank you for joining. Number one, appreciate you investing your time and money. And two, what can the platform do better, or what can I personally do better to make this a better experience? And gloves off, don't hold back. And people love that because they're like, I don't have a protective, prideful mentality. I want to truly know, like, what are we doing wrong? And that has really helped add features that really add the most value and create a sticky factor that people are sticking around. So it's really getting closer to the customer, because you can look at data all day, but you really want to speed things up, talk to your customer, get them on a Zoom call. And I'll keep this short and I'll stop talking, but there were a few emails that were quite contentious and people coming back, just ripping the platform to shreds and this. And I'm like, would you mind jumping on a Zoom? I just want to get a little more detail so we can make the platform better. And when I do that, it's like the tone of the person flips 180. Like they're respectful, they're impressed that I'm willing to like get ripped apart per se. There's a level of humility if you lead with that. And these people, there's a few times when they became friends, and they're friends to this day. But it's leading with that humility and just listen to the customer. You'll get from A to B a lot faster.
It's funny. I remember I was talking to one of our clients once, and they made some comment to me, Kristian, I love the fact that you'll actually get on a call with me and listen to me when some things could be better. And I've always shown like yourself, and I was like, really, doesn't everybody do that?
It's common sense.
It's like to me, that's the formula for being successful. It's just like you're offering a product or a service because you genuinely care about the outcome. But what I would say to our founders and our audience is, I think if you don't already have that mindset, what you're sharing, I think, is a phenomenal approach. Get on a call, even if it's going to be uncomfortable, hear what they have to say, and then take it to heart, because at the end of the day, the market is going to dictate our success.
Right.
So hindsight's 2020. You're 4 years in. As you look back, what things, if any, would you have done different getting up to this point?
Yes, learned a valuable lesson with partners. So I could talk about that all day. I'll keep this somewhat short, but I have a history of hiring fast, firing slow. And finally, it kicked in. I got to flip that equation and hire slow, fire fast. I brought on people at certain points to help with the tech, and really learned within 6 months they were not really there for the customer. Like they didn't have empathy. I'll give you examples. There were conversations like the customer doesn't know what they want, and the customer doesn't know what they're talking about, and the customer is not right, and we don't have to listen to the customer. And I'm like, no, we are here to serve the customer. And we have to provide value to them by adding the features they're looking for. We can't just sit with this one thing. And it was constant contention over months and months and just couldn't get anything done. And finally, it worked out. One of the key people decided to leave. They were not asked to leave. They just voluntarily left. I was like, oh, thank God. There's another person with them that they saw the writing on the wall and they exited as well. So it worked itself out. But since then, to work at Tykr, it is exceedingly difficult. You have to care about the customer. And I want to know about people's past experience. What have you done? Can you tell me about contentious situations with customers? How did you handle it? And I want those people that lean into humility. They're willing to get beat up a little bit, but to make a better experience for the customer. If you can do that, higher probability of working at the company. But yeah, that was the biggest lesson learned over the last 4 years. That was an expensive mistake.
And so let me ask this. And then culture, I would tell you, is a derivative of leadership. Sometimes I find it's intentional, sometimes it's not. Based on that experience, how do you approach Tykr's culture?
Yeah, so we're very sports minded. All of us are into sports in some way, shape, or form. And I like to use the term, I'll ask the question actually in interviews, can you tell me what court awareness or field awareness means to you? And in most cases, people will give me a blank stare. And for context there, like as an athlete growing up, you should not have to be looking at your teammates to know what needs to be done to put points on the board. The peripherals should be on autopilot. You should know what moves to make and when. So nobody should be coming to you asking for your help. You should see the issue and be preemptive. So we'll use court awareness quite often, making heads up plays, fail forward, fail fast. Like my culture I've created at Tykr's, and I'll tell people coming in, I don't need people to analyze things to death. I want people moving forward with a purpose. And if you make mistakes, fine, but own up to it and tell each other, what did you learn from that so we don't make those other mistakes? And that gives people that autonomy to move at their own speed, which is typically fast, and make mistakes along the way. And I don't beat people up. You make mistakes and you own it, I'm going to give you a pat on the back, like rock and roll. Keep at it. So that's the culture that we created at Tykr.
That's great. I think it's American. As I hear about how the U.S. compares to other foreign countries and how they nurture entrepreneurs, I think there's just this acceptance that, hey, you know what, we don't know everything and things will sometimes go wrong. Obviously, we get measured in how we respond, but just this idea that, hey, give me your best. And most days it'll work. Sometimes it won't. I think it's brilliant. Sean, awesome podcast. Before we wrap up, what advice would you give to any of the other entrepreneurs out there who are thinking about starting their own company?
Sure. A lot of people are trying to perfect that perfect idea, if you will. Don't put that pressure on yourself. You'll have something in the ballpark or on the peripheral of the bullseye, you could say. Talk to people, talk to your customers, your prospects, find out what the real pain is, and that'll bring you to the bullseye. But don't put that weight on yourself. Like for years, I was trying to think of that next new idea, like Zuckerberg came up with Facebook or Elon came up with Tesla. So no, you don't have to do that. Get in the ballpark and hone in from there by talking to people.
Fantastic. And on that note, Sean, if there's anyone out there who's interested in joining the Tykr team, investors who would like to use the app or investors who like to get on Tykr's cap table, how can they find you?
Simplest place to go, 2 places, tykr.com. That's TYKR.com. And then I'm very active on LinkedIn.
Fantastic. Sean Tepper, founder and CEO of Tykr. Sean, thank you for your time. I appreciate it.
Kristian, appreciate it. Thank you.
Kristian Marquez here. Thank you so much for listening to the Innovators and Investors Podcast. If you are a successful founder or an investor who would like to be on the podcast, please visit podcast.finstratmgmt.com/podcast-guest. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. Would you like to know more? Go to our website, finstratmgmt.com, or follow us on LinkedIn or on X.
Our handle is @FinstratMGMT. This is Kristian Marquez. Thank you for listening. Until next time.